Are you considering transitioning from residential to commercial real estate investing? In this video, we will explore commercial versus residential real estate and what that transition may look like. I'm Tyler Cauble. I'm a commercial real estate broker, developer, and investor based in the beautiful Nashville, Tennessee. And today I'm with BiggerPockets sharing some of the experience and knowledge I've gained through my 9 years in commercial real estate. Now you can find me on Instagram at Commercial in Nashville, and please remember to like, comment, and subscribe so that BiggerPockets can keep making content that's relevant to you. So as I said, in this video, I'll talk about shifting from investing in residential real estate to investing in commercial real estate. There are many important factors to consider when making that jump, including the benefits of investing in commercial real estate, notable differences between commercial and residential real estate investing, and I'm gonna give you some tips to ease the transition from residential to commercial properties. Now, I gotta be honest with you, outside of developing new construction residential communities, I haven't dabbled too much in the residential side of real estate, but I have helped many clients transition their residential portfolios into commercial investments over the past 9 years. And you'll probably relate to their stories. They all started off buying a fixer-upper, slowly built up to 5, 10, or maybe more homes over the years, and realized how much work owning residential real estate can be. They realized the benefits that commercial real estate could bring with regards to scaling and their time involvement, which we'll get to here shortly. First, what exactly is commercial real estate? Well, there are many different types of commercial properties, but at the end of the day, each of them is intended for business-related purposes, such as providing a workspace for tenants. Commercial real estate consists of 5 primary asset types: office, retail, industrial, multifamily, and hospitality. So now that you know a little bit about what commercial real estate is, let's talk about the similarities between commercial and residential properties. Location, location, location. Location is important. Doesn't matter if you're in a residential or commercial, that will hold true here. Both asset types can cash flow and can appreciate, which can make for a very strong investment for you, since not only will you get money every month, but the value will increase over time. And of course, one of my favorites, both offer many tax benefits, from depreciation to a multitude of potential write-offs. All right, let's dive into the benefits of investing in commercial real estate. So why invest? Well, obviously higher profits. Typically, the amount gained per square foot in commercial property is often higher than that in residential property. Usually in commercial properties, there are more tenants to generate income from than in residential properties, right? Most residential properties are single-family homes compared to a 100-unit apartment complex or a multi-tenant shopping center. Think about it this way: businesses can typically afford to pay more for real estate than residents can, because it can impact their business stability. Commercial real estate leases are generally longer and thus provide a stable, long-term source of income. With more tenants in a single project or building, it's also less likely that you will experience total rental income loss. You compare that to single-family dwellings. If one tenant moves out, you have 100% vacancy. Now, we don't have to get into the differences between leasing up commercial space versus leasing residential, but you kind of get the point there. Valuation. Commercial real estate is impacted by the revenue generated on the property. It is an investment and it gets treated as such. This creates an opportunity for the property value to increase tremendously depending on the business tenant. We actually bought a building last year for $440,000, but after signing a lease on it prior to closing, based on a cap rate, it was valued at over $650,000. And that's just because we signed a lease with a tenant and didn't make any other improvements or anything else to the property. Passive investing. Individuals can passively invest in a commercial property by investing as a limited partner with a commercial real estate firm. Or you could just invest in absolute net leases that have 0 landlord responsibilities. Responsibilities of being a direct owner, such as the property maintenance, collecting rent, dealing with tenants, and more, are not the responsibility of a passive investor. So you could actually just place money into real estate without the headache of having to run the day-to-day. All right, now for the notable differences between commercial and residential real estate. Commercial real estate has a higher barrier of entry. If you've looked at commercial real estate at all, there's Probably no surprise there. It's typically more expensive and you've got bigger competitors. In contrast to residential real estate, inexpensive commercial real estate, with the caveat that is a good investment, is rather difficult to find. There are far fewer commercial properties out there. There's just fewer businesses than there are people. And sites also tend to be larger than your average home. Purchasing commercial real estate generally requires far more capital, larger competitors. When you're investing in commercial real estate, you're swimming with the big fish. You'll be competing with REITs, real estate investment trusts, crowd funds, and well-seasoned investors, even businesses that are looking to own or occupy their own spaces. These groups have more expertise, specialized knowledge, connections, and better access to capital than the average investor, which makes it easier to lose out on opportunities to major players. Longer-term leases. As I mentioned earlier, one of the benefits of investing in commercial real estate is the stability that results from long-term leases. Residential leases can be month to month, 6 months, or even a year on average. Now, of course, they could always be more, but let's contrast that to commercial leases, which tend to be in the 3 to 5 year range, and it's not uncommon to see 15 or 20 plus year terms. In a lease agreement, the tenant agrees to pay rent for a specified period of time. The longer the lease term, the steadier and more reliable the cash flow is for you as an investor. Though a longer lease can seem like a godsend to an investor, it can also be the bane of their existence if you have a bad tenant. It can be tough and expensive to evict a tenant before their lease expires. Trust me, almost every single commercial real estate investor has been there. I'm sure if you've invested in residential, you've had to deal with that too. And it's not fun. Right? That's not why you get into the business. And that's why seasoned investors are so thorough when vetting potential tenants. And the great thing about commercial leases is that you can vet them as much as you want. You can look at bank statements, profit and loss statements, the financials of all the guarantors or partners in the deal, just to make sure that you're mitigating your risk. Commercial property also has lower vacancy risk. A lower vacancy risk is a result of the longer lease terms and the multi-tenant potential that you'll find with commercial real estate. Since leases are longer, your commercial space will be vacant far less over an extended period of time, and you'll have quite a bit of notice to prepare for an upcoming vacancy so that you can hopefully backfill that space before the current tenant is even left. Most commercial properties have multiple tenants on site as well. Take a 100-unit multifamily complex, for example. If you have 10 tenants move out, you'll still have 90% occupancy. On the other hand, if you have a single tenant vacate a residential home, you're at 100% vacancy. As an added benefit of lower vacancy risk is lower tenant turnover costs. Of course, you won't have to keep cleaning the space and making it nice. It's pretty typical in commercial real estate that the tenant has to turn the space back over to you in the condition it was in before you gave it to them. Higher profitability potential. In commercial real estate, you're dealing with more rentable square footage, which equals more tenants and more rental income. Thus, more profit for you as an investor. And the more tenants that you have, the more you'll be able to justify hiring full-time or even on-site property management to deal with the day-to-day on the property, which of course will free you up to go find more deals. You'll also find that in modified gross or triple net lease structures, which we'll dive into in another video when we talk about typical commercial lease terms, the tenants pay for common area maintenance on the property, buildings insurance, and the property taxes, leaving you as the landlord with little to no expenses. So if your property taxes increase or an HVAC unit blows out, you won't have to worry about losing that year's profit. Now, commercial real estate doesn't have only upside. There are some downsides as well, such as being more volatile during an economic downturn. In an economic decline, the business sector, especially small businesses, often take the biggest hit. During the Great Recession, around 1.8 million small businesses reportedly failed. When a business fails, so can commercial real estate, since it's very likely that they won't be able to pay their rent. You're also fighting an uphill battle, trying to get businesses to lease commercial space during an economic downturn. They're trying to keep their costs low as possible, and are likely unwilling to commit to longer lease terms considering the current economic environment. Let's talk about the loan process and loan types. Commercial loans are different than residential loans and are based more on the overall property or project itself rather than on the guarantor, though the principles involved in the deal will make a difference as well. And of course, I'm not going to talk about high vacancy or development assets because those are entirely different. Residential loans are based heavily on the borrower, with the specific property having far less impact on the loan. In my experience, commercial loans are actually easier to qualify for, depending on your experience in the field and overall loan value, of course. That's because they're based on the income that's coming in from the property, which helps add security to the lender, and lenders are all about mitigating their risk. Experience and education. Commercial real estate definitely requires more education. The majority of Americans have a level of familiarity with residential real estate properties and the market in general that comes from growing up in residential units. However, in commercial real estate, investors must understand how to structure a commercial real estate transaction, legal implications, zoning ordinances, tax implications, financial statements, property inspections, the titling process, and so much more. I mean, my team here has grown to over 10 people that are helping us with our day-to-day on investing, managing, and operating commercial real estate properties. It's just what it takes if you want to grow to that level. Now, I'm not saying that everybody has to have a team that size, but we're actively investing and developing property. If you want it to be a hands-off landlord, there are plenty of commercial real estate options for you. All right, now for easing the transition from residential to commercial real estate. Tip number 1 is to gain as much knowledge on CRE as you possibly can. The residential real estate market is quite different from commercial real estate. It's important that you become familiar with the commercial market way before you start investing. While the best way to gain this familiarity is arguably through experience, and I got mine being a broker for 4.5 years before I bought my first property, there are many wonderful resources out there that can provide information on the basic foundations of commercial real estate, such as books, podcasts, and YouTube videos. Back when I first got started in commercial real estate 9 years ago, there were no opportunities hardly at all for you to learn. I think I bought 3 books off of Amazon and there were 2 podcasts. Now there are a multitude of YouTube channels out there. There are so many books and some amazing podcasts out there that really will teach you anything that you want to learn about commercial real estate, whether you want to learn what it's like being a broker or how to invest in storage units. There's so much information out there. It's pretty nice. And of course, BiggerPockets is here doing the exact same thing for you. So don't forget to like, subscribe, and comment if you have any thoughts on commercial real estate. Tip number 2, build as many relationships as you possibly can in the industry. Developing and maintaining relationships with individuals within this business will greatly benefit you in building your portfolio. Bankers, brokers, investors, developers, and other players in the market can provide extremely helpful insight and future opportunities to you. You never know what kind of a deal is going to come across somebody else's desk. Tip number 3, find yourself a mentor. Learn from those who have been where you want to go. They've been there and done that. Ask questions. Reach out to individuals willing to mentor you or individuals offering courses or coaching sessions. It's far better to learn from somebody that the stovetop is hot than to go stick your hand on it yourself. I wouldn't be where I am today without all of the mentors that have helped me along the way. And one extra tip for you, buy the coffee. If you're going to take them out for coffee or lunch, you should pay for it because their time is incredibly valuable. Tip number 4, find some partners. When starting out as an investor, partner in deals with individuals that have experience in the field. You will be provided with an opportunity to learn more about the market, how you could structure deals, and possibly gain contacts that you may want to engage in future deals with. All right, now for investing in both residential and commercial. I do want to say that you do not have to choose between commercial and residential real estate investing and just completely shift lanes. It is perfectly reasonable to continue to invest in residential real estate while incorporating commercial real estate investments into your portfolio. It's all about diversification, right? Diversify that real estate portfolio. I personally have many clients that invest in single-family homes on their own, and then they syndicate other investors to help them buy larger commercial buildings. If you're looking to diversify your investments, it certainly isn't a bad idea to have different types of real estate in your portfolio. However, you can also diversify within commercial real estate by having a mix of office, retail, industrial, multifamily, hospitality, storage units, warehouses, doesn't matter. You can get them in different locations. You can have something in Nashville, Denver, Austin, Texas, and they can be in different property classes. Maybe you've got something that's new construction. Maybe you've got something that's Class C, it's 30 years old. There are a number of ways to cut and slice it. So there you have it for the benefits of investing in commercial real estate, notable differences between commercial and residential real estate investing, and I gave you some tips to ease that transition from residential to commercial. If you're looking to scale your portfolio, grow a long-term stream of income, and want to maximize your returns, you may want to consider investing in commercial real estate. I hope this overview provided you with helpful information and the confidence to take that leap into the world of CRE. If you're interested in learning more, don't forget to like and subscribe to BiggerPockets and leave me a comment below. What kind of commercial real estate are you interested in investing in? I'd love to open up that conversation with you. And keep an eye out for more commercial real estate investing videos from us here at BiggerPockets.